Welcome to Profit in Stocks 101. Today we're going to look at how a stop loss can protect you from a trade going south on you, and how it can preserve the capital that you have in your portfolio. The stock that we're looking at is MLNX Technologies. Yesterday the stock really tanked on everyone. So your stop loss would have really protected your portfolio. So I want to demonstrate that. You can subscribe to my blog also by putting in your email address, and you will get an email update from all of the trainings and any new posts that I put up on this blog. You can also subscribe to my YouTube channel, and you will get you'll get an email with showing any updates that I put in there for any videos. And usually this is a video blog, and so any of the training or commentary that I have, I usually create a video for it. So most of the time you will, even if you just subscribe to the YouTube page, you will get all the updates. So this is a stock that's very popular. I want to kind of go through, I'm not going to show you any charts today. I'm just going to go through the historical prices. That's what I usually use to trade with. Of course, this shows the open, the high, the low, the close, and the volume. And as you can see, this stock really went on a tear on July 19th. The stock had previously been trading at about $66, and it made a huge jump that day and jumped to $92.71 on that opening day for the stock, and closed at $93.90. So that's when everybody really took notice of the stock. And as you can see, it continued to climb. It did not make a new high for 1, 2, 3, 4 days, but then it did break through that high of 96.50, and it just continued to climb from there. And using the Nicholas Darvas method, Darvas would have actually purchased the stock after it broke through this 96.50. The problem that I have with this is that it doesn't really form a base, and I usually say 7 to 8 days. I use 8 days to form a proper base on the stock. So this stock only had 1, 2, 3, 4 days, and finally on the 5th day it went through that $102.70. So you could have said that 96.50 was the high, and the low was this 85.63. Started a position there and put a stop loss at 95% of 85.63, and you would have made money on the stock had you done that. And so, but if you didn't, like most folks, you watched the stock and maybe you decided, the stock continued to climb, never really stopped until this $113.90 mark here, and then we counted off 1, 2, 3, 4, 5, 6 days. That's almost forming a base. So let's say you decided you went ahead and decided to purchase the stock, or at least put a buy order, a buy stop, meaning at the 113.90, meaning that if it crossed that 113.90 buy point, you were going to buy the stock. So you would have, if you would have had that order in, you would have purchased the stock when it hit 115.26. And if you would have used my trading rules where you only risk 1% of your capital, then you would have put a stop loss at the lowest low after this 113.96, which is or 113.90 right here. So the lowest low would have been this 106.31. So if we use the calculator here and we say 106.31 times 0.95, you would have put a stop loss basically at $101. So you're in the stock at 115, you're risking 1% of your capital, you have a stop loss put at 101, meaning that if the stock goes south on you, you would be out of the stock at $101. And you can see you were very excited because the stock went up and up and up, and right here it hit another $120. It just never quit going up. But then some bad news came out yesterday, and the stock opened up at 103.99, and continued to go down to a low of $94.81, closed at 165 on very heavy volume. But you would have been out of the stock when it crossed that 101 point, because you would have placed a stop loss through your broker to get you out of the position at 101. So you would have lost on this, on MLNX technology, using my trading method, but you would have 99% of your portfolio left intact and ready to live and trade another day. And so no matter how our trading method protects your portfolio, even if you don't make wise decisions as far as purchasing the stock, because it does get you out and back in cash, and it does limit the amount that you put in any one particular stock, limited to that 1% of your trading capital. So this is a sound method for making sure that even if you make bad decisions on stock, which you're going to make, you definitely live to play again another day. So that's how stop loss can protect you. I would not have purchased this stock. I did not feel that it formed a proper base. It looks like it's forming a proper base now as it's pulled back. But this large pullback and this wide swing from $120 all the way down to $94.81. I don't like stocks that move, that have that wild of a swing in their trading for this trading methodology, so I would leave this stock alone. So there's your quick lesson, real live action on how a stop loss would have protected you on this MLNX technology stock. Subscribe to my blog, subscribe to my YouTube page, and get further updates.